Hello, everybody. I was talking to the camera thinking I was live, but I'm not. And I'm like, no. But here we are. We're live now. All right. So let's talk about some of the more popular non crypto assets as the markets are kind of rallying pretty good into the holiday season. I wanted to go over some really important factors on what's driving this. I think the number one right now, I think, is the weaker US dollar. As you can see here, it's just getting killed. That can have an effect on everything out there in terms of opportunities in foreign lands. The other thing here is the debt situation with the treasuries are coming down because of it. It's really because of the recent announced pivot from the Fed. So that's driving things. But I think that there will be potentially some major catalyst coming early next year that will reverse all this because things will break when you're running a $2 trillion, nearly a $2 trillion deficit in 1 year. I mean, that's unseen. That's obscene, reckless government accountability. But that will have to break something because that is meaning when you're running these kind of deficits over the last number of years, and when you have interest rates at 900, potentially $1 trillion per year, that's going to have a major drag on the U.S. Uh, finances, their national budget, along with the overall negative impact on the markets. The markets, I don't think, will be able to rescue that. So when that comes out, I'm not sure. So these are the two big drivers right now. And then the other big thing that people may, I'm sure, have to be aware of this is the oil price is coming back. Here from a low point of 68 up to $73. That's a pretty good move because of the conflict in the Mideast with the attacks on shipping containers as they pass through the Red Sea. Obviously, that's a big concern, and that's having a huge impact on price. So where that rolls out, for instance, a peace agreement, and then shipping companies may resume shipping through Red Sea. That may obviously impact oil price. So who knows where that might play out. The big one here of concern is oil, platinum, and silver. Okay, I've not added platinum yet, but let me just add platinum. Um, so let me see here if we can find something for platinum. Uh, let's see here, but platinum has done fairly well. I guess right here. We're just looking at returns. So platinum is outperforming both gold and silver, and it's been doing pretty good. Now, this is a 3 month time period purposely because everyone gets tied up in their precious metals, and they still will poo poo Bitcoin when you clearly get, like, at best, a 10-time return with Bitcoin versus classic silver. I just don't understand that. But when you look at the 1 month returns, you can see still here that platinum still a better return. Meanwhile, Bitcoin might not be as much, but there are better coins out there with better returns, like way better. But crypto is the place to be because when you tie up your money in any of these assets, you're tying your money up with opportunity costs. So that means you're getting subpar returns versus crypto, and you would get way better performance. But a lot of people don't get that. Yeah, let me go over to natural gas. That's a good question. Natural gas has been pretty well a disaster. I'm just using CFDs. They're pretty well similar. Um, let's see here. Yeah, natural gas has not been. Well, actually, I'm quite surprised by that. That's a good call, actually. Would never have thought of that. But from what I saw, natural gas has been a weak player. But hey, good call. That I'll take. But that's been since. Let me see over the last month how that's been performing. Yeah, so natural gas has been underperforming for the last month, which it shouldn't be. So that's probably what you don't want. All right. So coming back to the gold, yeah, you can see crypto's a place to be. Factor in your opportunity cost. Most people just continue watching their YouTube doom and gloom channels. Now, another one that's been fairly exciting is the UK markets. Um, the UK markets are coming back because they've officially said that inflation's come down, and yeah, you can see it's only up 3.86%. Um, this is going back about a month, so since November 6th, and you can see here Japan's not doing well, UK's, but US is obviously the place to be. But look at this, the Russell 15 or 16% return over the same period against all these other ones. So oddly enough, the Russell is taking off and doing much better than Nasdaq and the top 30 corporate stocks out there. So fancy that. People are happy with these returns, but if you had more in Russell, you'd be doing much better. Um, so Hitchcock's G, if you want to give me the symbol of that, I can probably talk about what I'm seeing with that. And what I can do is I can give you the profit factor as well, because that's an important one. Um, yeah. So just give me the symbol name on that. Now, I don't talk a lot about Forex for obvious reasons because the returns are really paltry unless you're willing to use leverage. But with the volatility, I wouldn't touch it at all. It's high risk compared to other players. So with Euro USD, 3.5% return, pound against the Euro negative, DXY is negative, as I said, as well as the traditional good asset would have been the yen. But because the yen has been strengthened and the dollar has been weakened, and again, that is as effective come in around here, the peak, October 30th. So that's a huge factor. So again, the only one giving any positive return is Euro US dollar. But again, if you look at the last month, things kind of change right there. Anyways, we got the symbol here, AMS ticker on the JS. So that is Anglo American Platinum. I gotta say, you're really plugged into this. Okay, let me just add this. So AMS, AMS, is that stock or is that an ETF on the GSC? AMS ticker. Let me go under all. AMS, American Matte Platinum. This one right here, I assume. Whoa, amazing, nice. I gotta say, you are really plugged in. That is impressive. Now, I only watch a certain subset of what's available on Oanda, but that is a nice one. Thanks for that. That is pretty incredible. So that really took off since, yeah, about a week ago. Wow, from 723 up to 33%. I gotta say, wherever you're getting your information, it works. That's pretty good. So right now, let me just see how that compares to Bitcoin. Let me know if you're a Bitcoin trader, Hitchcock's G. Be interested. So there you go. Bitcoin 16%. Well, that's double. Very nice. Very, very nice. I gotta say, I'm pretty impressed by that one. Um, and the natural gas, as I said, long term, I don't know. Uh, where was it? Right here. Natural gas has got deeper losses than oil, WTI. Anything else you want me to check right now, stock wise? I mean, what I was kind of surprised was that the Russell is outperforming the regular U.S. major indices. That was a surprise for me on that, and I don't know where it'll shape up into next year. I really don't know, but what I predict for next year, I think like back in 2022, what happened, or sorry, 20 this year actually, where typically a year ago, this time last year, a lot of big hedge funds will sell off their big losers to reduce their wins in order to pay less tax, and then they'll buy them back in January, first half of February. So stock market goes really, really good, and then it dips, and then you saw what happened come March of this year with the banking collapse. We could have something that could repeat itself next year with the same pattern. Because if you're up until mid February, you may think you have another strong stock rally. But I do think that there's going to be some kind of catalyst. What? I don't know. I can't really say about natural gas. I mean, I am in Canada, but I can tell you a lot of natural gas can come out of places like Alberta. And depending upon the pipelines going into the states, that if those are negatively impacted here in Canada, uh, obviously the price of natural gas is uh, has no hindrance on us. But foreign, the big players would be Oman, UAE in the natural gas. So I'm sure that there may be some impact on the same, because it's the same shipping routes. So yeah, there may be some impact on natural gas, but domestically might not be impacted as long as Canada's shipping and exporting natural gas to the U.S. That might not have a big impact, and that only obviously goes up until about March when the cold season is still kicked in. If we have a warm season over the next few months, there may not be a lot of impact on natural gas, and that might be another reason why it's not having a steady rally. Just my thoughts, but I mean I could be wrong. But yeah, anything else you want me to take a look at? I can gladly oblige. But right now, I think that we're going to see pretty good markets. The fracking, I don't really keep track of. I do believe that they are still um, trying to do that, but a lot of it's been shut down or contained because of Biden and his policies. Remember when he came in the first week, he closed down the Keystone pipeline, and that was a huge driver for oil imports into the U.S. from Canada or from Alberta, and that's not really doing so much. There's more importing of oil into the U.S., where under Trump it was U.S. had total energy independence. So if the U.S. is still importing oil now, and not just that, remember they depleted half of the energy reserves for wartime in the storage in Oklahoma. So they got to replenish that, which I think they're doing. So in terms of fracking, I can't really say in terms of where things are at domestically in the states for fracking, but it may depend upon the state. Like in Texas, where it's still conservative, so they'll still allow it. It's hard to say, but obviously I follow more just the higher price of oil. Trump or Biden next? I mean, in terms of the politics, well, with the recent Colorado thing at the Supreme Court level, which I don't agree with, and apparently there's Maine, I think Michigan and California going to try to do the same thing. The whole outcome really comes down to the U.S. Supreme Court, and that will drive really where Trump goes. Obviously, Trump has the polls leading by quite a bit, apparently, and Trump may get it next year, but I'm sure a lot of the Democrats won't want that. So uh, it's just one of those touchy situations. But I'm more of a libertarian. I don't like government telling me what to do. I don't like paying tax. So you can tell me, you can tell where I'm leaning towards. In fact, I'm actually wanting to get out of the West. I've lost a lot of faith in the West for a lot of things. Anyways, anything else you have? I hope you guys are sticking around for Christmas. Are you guys sticking around? Just let me know, and I can do more streams around this late afternoon time over the next week or so. Because what I'm finding with trading view, is I get more followers by doing live streams instead of the ideas. It's more work, but streaming it's easy. You just blah blah blah, show charts and give opinions on. You get more followers from that. So that's the route I'm going. Um, Anything else at all? If not, I'll do it going once, twice, three times, and we'll shut down. Okay, I'm going to do it going once, going twice, going three times. Looks like nothing else. Oh my God. Nice one. Out cool. B. By the way, Mara quickly. Mara. Okay, let's do Mara. Let's do here. No. Here. Mara. Is this a stock? Mara. Marathon Digital Holding. Is that what you want? Marathon, the miners? Oh my God. You get the winners, man. $10 to 24. Wow. I hear Coinbase is doing as well. Let me just look up Coinbase. Uh, Man, you're really good. Let's see here. How's Coinbase looking compared to that? Uh, okay. So, yeah, it looks like Coinbase is doing better. Um, yeah. Okay. Bitcoin miners. Here's the deal. I mentioned this in my prior video on crypto. You have ETFs coming out for Bitcoin, including Ethereum, from obviously the big players of BlackRock, Vanguard, and the like. So a lot of people don't know this, but BlackRock has invested. So there's a Bitcoin council, a Bitcoin mining council, and they kind of, in my view, have control over the price of Bitcoin. I mean, if you do look at the pricing pattern of Bitcoin, where it goes up in steps, let me just show you what I mean here. So if you look at Bitcoin, where it's kind of going up a big spike and then it kind of consolidates and then it moves up again, I think that is due to the miners are controlling that because they're the ones mining Bitcoin. So if you look at, let's say, a year to date, you can see a lot of this big step. That might not be the best. Let's say 3 month. Uh, yeah, you can see where it consolidates, pumps, consolidates, drifts, and goes back again. Here's my view of it. With Bitcoin, uh, to me they're like a cartel. Okay, and they drive the price of Bitcoin because what they do is they'll mine Bitcoin, they sit on Bitcoin, and then they release it back to the exchanges to be sold off. Now, what's going on with BlackRock is they've pretty well failed with the ESG thing. So now they're moving into crypto, trying to control crypto, specifically both Ethereum and Bitcoin. So what they've done, no different with ESG, is they've actually invested into the four of the five mining US based mining companies. So my way I look at it is way I look at this is that Bitcoin is controlled and now it's going to be negatively impacted by the likes of BlackRock. And as a result, BlackRock, Bitcoin is a suppressed asset now. And when you look at gold, you could probably say the same thing on gold with, how a lot of the banks hit huge fines. I think we're going to have to see the same thing with Bitcoin, whereas some of the altcoins will outperform naturally versus Bitcoin. That was part of my spiel in my last video I just put up. So there's that. So with the mining companies, they probably will do very well. Like especially BlackRock's involved, and the other big factor will be obviously ARK, the ETF. I feel that they're involved with insider trading because one day they'll dump a bunch of Coinbase, and 2 days later they'll buy Coinbase and it's related around some news impact on the price of Coinbase. And I've seen that twice now with ARK. So I think that they may be in. I shouldn't say this, but could be insider trading activity there. I can't say, but it's weird timing on their positions on something like Coinbase. Um, so there's that. So that's my view of Bitcoin. I just don't think it'll perform as well compared to other altcoins, and as a result, that may impact the Bitcoin miners, and that's all going to be, I think, manipulated by the likes of BlackRock because now they're into it, and the ETF is supposed to be coming the of first week of January, and it may drive up the price of Bitcoin quite a bit, but the long run is what I'm speaking about. Some more other new ones to look at. So we've got 500 .com. I appreciate you sharing these. Do you know the symbol for 500.com? Is that stock? I'm assuming. I'm not sure. Yeah, give me the stock symbol for that one. CP is familiar as well. Let me just look at that one. CP. Are you? I mean, I'm assuming you're already in the early stages of these big spikes. C CSP SR. I don't see that one. CSPR. CRISPR. Yes, I've heard about CRISPR. Is that the right symbol name? Let me just see here. Oh, here we go. CRSP. Uh, that one has kind of gone flat. Oh, I'm sorry. No. Yes, that's kind of gone flat. But that might go up quite a bit, won't it? Is this the same stock? This CRISPR, CRSP? Okay, cool. Thanks. Yeah, it's kind of gone flat here since the last month. Could this move? Probably. That might do well. Do you also have the symbol for 500.com? I've never heard of that one. Is it 500? No, I don't see it. See, a lot of my scans, what I'm just to be upfront is I go after low volatile stocks. So a lot of the picks that I put out, that's why you don't see a lot of volatile stocks. I mean, they have nice returns, but when the markets turn, they come down fast. So I try to avoid those as much as possible. I'm more interested in steady eddies. Like this one is a REIT called Cube. Um, and they are a let me see here. Let me get rid of this Coinbase. You can see here $33 to $45. So that's a very, very good steady eddy. I caught this yesterday, and long term, this could be a nice winner. And it's very low volatile. And there's obviously a good story behind it because as the markets slow down, people get affected with layoffs. And in the last 2008 financial crisis, stock like stock what do you call it? Locker companies did very well during that time. Why? Because people use those services to store their furniture or whatnot as they're downscale temporarily to ride out the financial crisis. So a lot of these type of stocks do very well. So this one called Cube is they focus on real estate locations for the operators that run the locker facilities. So this is a REIT, and I've been putting some money into these. There's another one I can't remember the name, but these are doing really good. The real estate market overall is doing really well, but it's not the traditional residential. Like Toll Brothers might be a good one, but I'm not seeing that as a hot sector. I mean, it might be, but I mean, during the summer, this is a really good stock to own. Let me just see how that's doing. Yeah, so there you go. So that started October, $68. Now it's at 108. So real estate's doing very well right now, as well. And this is a good sector to be in. How long that will last? Let's see a firm, another real estate player. Wow. So that's at $13. Wow, 48, man. You're like a stock trading wizard. I hope you're driving you're upgrading your Lamborghini to a Bugatti the way you're with these picks. It's pretty impressive. Um, but like what I'm saying, I've been seeing, yeah, the real estate picking up, certain independent, conservative financial is doing well. So right now, just as an example, I run scans. Let me just show you one here. This one right here. So right now for today, these are some of the stocks that we'll go through. Uh, there's 2,700 of these, and what will happen is, so we got Meta, Microsoft, Adobe, Akamai, a bunch of these, some tech. And what I do is it'll go in, scan them, and then it will build out all these reports. And from there, what it will do is it will usually um, pick out low volatile ones, like Adobe would be a good one. And the thing is with that, I can use this strategy here, this Ikomoku, and I can use the profit factor as a guide to say, is it a good one? So, for instance, you're on a daily profit factor 2.82, which is really strong for this Affirm. And when you look at the weekly as an example for really good, solid long term testing, you know, that's what you want to look for now. And that's what I use as a screener to see how long the weekly time frame is. Um, and measure that profit factor. And usually, so if I show you, let's say a firm, you can see it's below the one. But if I show you cube um, here, you can see here the difference between the weekly time frame on cube at 2.22, which should state that it's quite possible that this is a really good long-term player. Um, and thinking about it, it would. So when you look at companies like Affirm, I'm not sure what to say if this is the case, um, but yeah, you don't know how long this rally will last for. So if you look at a Coinbase as a good example, because that's rallying pretty good. Um, so if you look at Coinbase and you look at the weekly, you can see that the profit factor is not so strong, and that's usually because of the volatility in the stock itself. So if you look at, you can see how it's so consolidated, but you always want to look for the early stages of a rally on a weekly basis. So I used to use daily, but this seems to work better for investing, right? So you use Trend Cloud System from Chris Julian. This is an indicator you bought on Trading View. So that is Trend. Are you? Is this for Trend Cloud, Chris Giuliano? Hmm. Yeah, I'm not sure if that's from. So it is. What do you know the name of the actual? Uh, okay, yeah. Is it a strategy or is it an indicator? Do you know the formal name of the on Trading View? Because this one I built myself. This one works pretty good because what I like about Ichimoku, it's a self-contained system of signals, and this one's worked pretty good. In terms of the entries can be good. Like for instance, I picked up a stock here called HSCI. I think it's this one, and you can see here, it was back in November, in around here at $34, and it's popped now to $85. So the thing is, it may not pick a lot of the winners, but when you look at again weekly, if you looked at the weekly time factor, it'd be about 1.5, 1 point or 2 up until this point, and it started to taper off. So When you say search, what are you referring to? Sorry, man. Um, yeah, if you're referring to your trend line, I couldn't find it in the indicators. But coming back to this, yeah, you'll see certain coin or certain stocks that do look good. This one's done relatively well, so you're up from $30 not long ago at the end of November, and boom, it pops. And this one's a digital medical record company, so yeah, digital medical record. So it's done fairly well. Last year, probably my stock of the year for 2022 was this one called um, ASC. I think it was the symbol. Yeah, Ardmore. So if you look at Ardmore on a 5 year, let's just say, remember this is 2022. This thing just took off like crazy. $4 went all the way up to 18, so it's gone up close to a 5 time return long term. And this one did pretty amazing long term because um, it was a shipping company, right? And they only ship minerals and oil. So they were recessionary proof. They were unbelievable, based out of Ireland. And that was the best stock that I saw last year. This one, this year, it's tough to say because I've switched over from the platform that generated this to over to TradingView. Okay, so yeah, you said it's a up to date and it's a paid indicator. Yeah, so I'm not sure of the name of the indicator. I'm not like trend cloud system. Let's see here. Uh, you know the author's name? Yeah, Ardmore was a good stock last year. Obviously, it's not done well. I mean, I can't say if Cube's going to be one of those big winners, but it's done fairly well when you look at since the rally. And by the time I catch it, excuse me, by the time I catch it, I might get half the move, right? Like it's really hard to get the early moves. So this one, let's say 3 month, that started 2 months ago. So $33 to almost a 50% return. There's going to be a lot of runway still available for this. Chris Juliana, do you know the author's name? Because I don't think I can track Chris. Yeah, I need to know his name right here or his username. Chris Giuliano, can't find him. But yeah, Ardmore was really good. HCI did fairly well, and again, these are low volatile movers, um, and these stocks did very well with Cube, and I got a bunch of other ones. One of them will move long term, and they'll do very, very, very well. Uh, People say don't go into equity. I find that's kind of preposterous because, like for instance, when you look at is it URE for uranium, uh, ProShares uranium. I can't remember the symbol name, but if you look at uranium, yeah, here it is. So uranium's done very well. You know, let's say year to date, 18 bucks to 29. That's pretty good for a mineral. And as I said, you got platinum. It's not too bad, but uranium is probably the better commodity to be part of. Yeah. So I don't know. Looks like we're getting some more users coming in. If you guys got any stocks you want me to look at, or ETFs or anything really, just showed all the major pairs out there, major instruments, gold. I've shown oil, natural gas, treasury, uranium. Sorry, the dollar. Some of the forex pairs that have been, So if anybody's got any requests, I can pull up something. And I got to tell you, Hitchcock's G. I mean, you're doing some very nice picks. the question is how you're finding those picks in the early stages of the rally or the run up is the tough part. Like right now, I can watch as many stocks as I want, but with TradingView, you're limited based upon the software and the capabilities. You'd have to have a pretty rock solid hardware uh, system to really take advantage of it. But on the other hand, you don't want to take early stages because sometimes you might want to see like some kind of confirmation to see you got a long term rally. That's the thing. But right now, real estate REITs are doing well. Certain sectors like I found uh, a REIT that focused on warehouses in Southern California, and it's doing pretty good. Um, so we got here. I enjoy the volatility in and out. Scale. Oh, I see. Plus 20% every month. Wow. So the Red Sea is a clue. Gotcha. Well, yeah, it's a huge news factor and has a huge impact on energy cost for the shipping companies. So that's one sector that you can uh, be involved with on, and as well the the energy as well, like futures contracts. If you play play futures or options, but I follow what you're saying. But I'm low volatility. I'm just doing my analysis for. I'm using a service called TraderSync, and and I can import my trading activity for the year into it. And what I'm finding is that my commission fees are way too high than they should be, because what I do is I, I, I put in yeah, I follow you as well. I'll make sure I follow you. But what I'm finding is that right now with what I'm doing in terms of my trading commissions are too high, and I'm on the lowest interactive brokers, and about a 30% of my actual trading cost or trading value, both on the sell and buy, or sorry, on the sell and buy, it's 30% of it's for commissions. So I'm trying to not do the scalping, as you said, because of those costs. So I'm trying to more invest, not day trade, because I'm just getting kind of screwed over because of that. So that's why I'm looking more for the long term. And like I said, the REITs right now are the performers, some of the financial, but using this methodology with a scanning, it can actually, I got it right here. Let me just show you this file as an example. So this is a typical file I can use that will show me what are the hot sectors to be in. And this is tracking over 65 sectors. So yeah, I'm the same way. I trade as well, but I only do long only because there's some good longs. So right now, obviously, crypto's the hot one. U.S. financial; those are non-banks, but more financial firms that are investing somewhere. Like family offices have oddly stocks themselves. China's kind of on an upward, but I'm not seeing it because they're super high volatile. Cloud, I'm not seeing so much again volatility, but this right here is where the low volatile performers are in the REITs, mostly, and in the sense not in the residential. It's in these certain uh, niches, and as I said earlier, the ones in Southern California warehousing in LA, because they're nobody's using them, so companies are buying up these warehouses and then renting them out to new upstarts that need warehousing facilities. And the company that's doing that is genius in buying up these empty warehouses because they're super cheap. So who would think, right? The other one that I'm tracking, are the big one for the recession or slowdown, whatever you want to call it, is the storage locker facilities, the ones that go in and buy up the real estate. Another one that has done very well are companies that buy up. I think it's called digital. I can't remember, something digital, and what they do is they buy up the property, the real estate, build the buildings, the infrastructure for the data centers for the cloud providers. So like the Amazons, the Azure and Google Cloud, So these companies will build the infrastructure, the buildings. Then companies like Equinix comes in, builds the cloud infrastructure, and then they lease out the facilities and the hardware and the networking facilities to the big cloud providers in IBM and all the other ones I just mentioned. So that's the interesting one. So yeah, you trade trend, which I totally agree with. It's the easiest I find. Crypto, hence Mara, but hard to get in early. Yeah, it's just talked about that. That's the hard part is figuring out what is good. So early on. So that's what I'm thinking that these REITs are really good because it's a good defensive trade, but everyone thinks, oh, I'll go into gold or I'll go into treasury or something. But there's certain ETF providers or companies that are part of the holdings of these ETFs, and they're awesome companies to be in because they go up 50% or up 3-4 times return. They're amazing. You just got to know which ones to get into. So as I said, when it comes back to the sector analysis here, um, yeah, I'm able. So these are the returns for the last month, or pretty close. It's a metric I built. So the big one right now is real estate and semiconductor. I'm not seeing because again, it's volatile, and you don't want to be in volatile. This one's the big one because of Russell, as I showed you, is doing very well. Here, look, you got Russell up 16% versus Nasdaq in the top 30 in the U.S. So this confirms what's performing. It's just the volatility I don't want to take on because I want to invest more long term than just do the short term day trading because I'm getting killed on commission fees. So yeah, yeah. But you said about the marathon mining. Yeah, you gotta get in early, but that's the problem is you gotta figure out which one's gonna break out of 10 or 15, right? So that's the problem. If you have the way to drive that, I'd be interested to talk to you to figure that one out. Get 10% equity in my property funds. That gives me rental income. So you are you saying you own real estate, or do you're part of the real estate income trust? Because right now I'm seeing the REITs are doing really good in the sectors I'm talking about. And then there was another one that only focuses on well off areas and building real estate in those areas and doing fairly well as well. And long term, these make sense. So I don't know. One other one, I can't remember the name of the symbol, but it was last year. Oh, so you're trading in ETFs. Okay, so ETF slash REITs. Okay, makes sense. Yeah, and I totally agree with that. And again, the cube is one I can show because that's the one I remember. But I did have another position open right now in another REIT, and then they're up 1-2% since yesterday. Not great, but they will be kind of like a steady eddy, is what I'm after. Uh, what else can I tell you? Yeah, so there's certain ones trading. As I said, as I've shown you, the tech is still doing very well, but it's the volatility that kind of kills it. And you want to stay away from volatile stocks if you're going to get an investment because what happens is you get into stocks that are performing really good, like I don't know, Coinbase is an example. And then when something happens to the markets, and because Coinbase may follow the general market, and it gets clobbered real fast. So the drawdowns are more extreme, and thus you have the volatility. So you want to look for low volatile instruments to trade and kind of invest versus day trading. I mean, that's how I'm seeing it for the long term because you'll have less of a heart attack trying to day trade with these highly volatile stocks. I mean, especially moving forward going into next year, which is important to understand. But people just follow along with what they see on YouTube or even on TradingView itself. But part of the problem is you get profit short term and then you lose profit. See, for me, using this methodology that I was showing you on the scanning here, this works and this works really well. But what I'm trying to fine tune, which I'm pretty well at now, is finding the really good, nice entries long term, and getting the right entries for decent return. My problem now is the one that showed you, the HCI. This one, HCI, it's a stock. This did really well, right? I mean, look at it. That's a really nice spike. So somewhere in here became one of my breakout, and boom, and look what happens. It just goes flat. So then that's the time you need to dump it and take the profit. But that's what I got to work on, a process to work on that, to get out of this and then free up the profit and then look for the current trades like the cubes, as I was saying, right? Let me show just for people that are new coming in. So this is the one I took on yesterday. Cube. Yeah, Cube Smart. So that's what I'm after for long term. So that's since yesterday. So as long as I'm able to find those, that's great for the entry, but I got to work on the exits part to tell me get out now before it goes consolidates or it drops. You know what I'm saying? Yeah. Thanks for that, lender. So your Walker Dunlop scares me though, up 30%. Yeah. Let me see if I can find that. Uh, yeah, this is what I like to do these streams for, is a conversation. You just learn. So Walker and Dunlop is what you're referring to. Yeah, see, this is hard to determine, because once this you hit that consolidation, when it should perform, if I was to hold on to this, I'd probably take my profit and be happy with it, free up your capital, and look for the next set of opportunities. That's what I would look for, because once you start doing that, that's the proper way to do it. The problem is, including the TradingView screeners, they don't give you, they give you the winners at the time, but they don't have a factor for the volatility, or when a downturn comes in the markets for like a day or a couple, let's say a week, you just gave back your profit, which is what you don't want. So you're better off, from what I'm seeing, to look for companies that have performance but are low volatile and has a story behind it. And as I said earlier, the cube looks pretty good because, as I said, if we are in a downturn and people got to place their extra stuff that they don't want into a storage locker. So you'd think that that would be a really good stock, and it's already up quite a bit. I mean, that's just how I'm taking it right now. So let me just see here. Yeah, I've seen. Actually, I should say the WD. I remember. I always thought that was Western Digital, but let me just see here if we can find the cube again. I'm just using cube as an example, just so you know, of a recent trade I took on, a recent live trade. So you can see here, it's a nice trend up. You can see here it doesn't have those drawdowns, the steep drawdowns, which I don't want. And it's just a nice steady ride up. The problem here is, will this continue? As long as the markets continue to move up, I should be okay, and to get some nice runway returns here. But you know, I'm pretty sure I did see this stock pop up. Like a good example in which Hitch, which showed here the WD. I saw this stock, but it wasn't the star performer. Didn't meet my metrics. See here, a bit of a drawdown right here and here, right? So it's these drawdowns you don't want. Even if the market's going to rally, that's great. But if you're going to have these drawdowns and the steep drawdowns, you're just giving back what you make, which you don't want. So you want to you really want to look for companies that are rallying, not top rallying, but have very low volatility to prevent these deep drawdowns that will make you lose sleep at night. And this is a good example. Coinbase. You can see it's not steady compared to, even just as an example, WD. Well, just as a really good example. See what I mean? You're getting more trend out of Coinbase, sure, but look, you're not getting the deep drawdowns, and it's a steady eddy. Long term, these can perform better if they have the story behind it. Um, and Yeah, which was the 25% return you saw, Hitch? Um, and it's the same thing in crypto as well, because a good example, let's say, what I loved about. Let me pull up another chart here in forex. So the secret where the wealthy, where they were getting the returns in 2022, were two places, depending upon where you live. So in the U.S., okay, when you look at the returns of just holding the U.S. dollar for 2022, looks like I'm going to have to release some of these. Okay, so just as an example, if you look at, let's say, a 5 year return. So here's your period of 2021, July, up to here, the peak in October 2022. So everyone's losing money here. But in my case, if I'm living in Canada holding US dollar, I don't have to trade. I'm getting probably a nice 15% return just holding US dollar and DXY, right? So, yeah, that's the question. Are you tough enough to hold out long enough? That's the question. But I'm just showing you long term. And if you know the story, yeah, you would have gotten a 15% just holding US cash if you're a foreigner holding US cash. So if I'm Canada and I'm holding US dollar, because I'm spending Canadian dollar versus US dollar, I'm getting the performance. Another good one that people don't know is, I'm just going to show you the comparison, is the USD Japanese yen. So this is what wealthy were putting money into, was this simple trade, right? You can see there's no drawdowns here. Here we have a drawdown. We have a drawdown here because this is the Bank of Japan getting involved in those trades. Let me pull up a 5 year. Uh, Let me get rid of this chart. Let me pull up another chart here. Okay, so holding the the Japanese yen. Okay, actually, this would be a good one to show. Um, so if I was to add in the US dollar, Japanese yen, okay, just to show you the volatility across the board on all the currencies, you can see here Japanese yen is strongest, so it's the worst player. But if you look at the 5 year, which one's going to give you the highest return? It's the yen, 27% over 5 years. Why? Because it's a weakening currency, right? But look, you're not seeing a lot of these big drawdowns compared to some of the other ones. And it performs. So right now, it's not performing. But if you knew the secret here, you'd be doing very well. But if you want to know what's really going on, and I'm going to just show it, I've shown this before, you want the number one asset out there outside of crypto as a secret. Look at this. This is the one people don't get. I talked to big money managers, and they will not touch this trade. It blows my mind. So when you get the USD Japanese, the US, look at the number there, over a 5 year return, 372%, holding euro and the Turkish lira right there. Okay, people don't get that, and if you hold on to that and not do anything, you would have gotten over last, let's say, since 2021, you'd be up 500% just holding Turkish lira because of the weakening currency. And look at, there is virtually no drawdowns whatsoever. And it's the same thing when you look at the euro lira as well, Turkish lira, right? I think it might be a little better. Actually, it's in line, pretty close. So ask yourself. People go, well, like, like you don't have to do anything. You'd be up 5 time return. I don't get that. And compare that with Bitcoin. Okay, so if you look at Bitcoin USD, everyone gets all excited about the performance of Bitcoin. But look at those big drawdowns, right? And now Bitcoin's coming back, and people hang on to Bitcoin around here. Again, opportunity cost. This is the time when you get back into Bitcoin, October 23rd, and you'd be up 378%. But yet that trade in US dollar, Turkish lira, you'd still be outperforming. Here and here, you would dump it, right? But people hang on for dear life. The hodlers get killed. You know what I mean? And that's a sad state of affairs, right? Um, I use the I MACD to show me momentum and the CCI indicator to give me clues. Yeah, let me pull that out. Okay, let me see how I can do that. I'm gonna do that on the Euro USD. Okay, a lot of people have an interest in forex, so I'll pull up that indicator. Okay, so let me pull up. There's one I know about uh, called reverse MACD. It might be similar. Let me get rid of this chart as well. Right here. Okay, so here's the Euro US dollar weekly basis. I'm hoping I can pull up the symbol. Is it IMACD? Uh, Impulse MACD? No, I don't know if that. Let me see. That might be similar. I see. Is this similar to what you're using, Hitch? The trend, like if you see that green, that's the time to get in. And I guess you said it's layering it with the CCI, which is good. So a combination that looks pretty good. Okay, so this is a very good indicator, right? IMACD. You know what? I'm gonna write these down. Sorry, you're spitting out fire, dude. So that's called the IMACD. So let me show you one I've used, which I know that can work as well. Is let me get well, I can actually layer it. So there's one called the reverse MACD, and then there's this one. I'm not sure if this is my strategy as well. So I've kind of done something similar where I have a MACD and I'm using the reverse right here. So this would be in your entry. Sometimes it works, sometimes it doesn't. I don't know, but that's probably why I don't use it anymore. But the reverse MACD can kind of work, but I switched over to the Ichimoku because that seems to be a little better as well. Now, if you're a trend follower, let me get rid of this chart. If you're a trend follower, um, a good one people don't know about is Donchian. Donchian. So let me pull up. I don't know. Let's use Bitcoin because that's the most popular one. So with Bitcoin, it's got lots of activity going on with it, which is great. Let me close whatever this is. Okay, there we go. So there, and I'll get rid of this. So this is my Ichimoku, okay, which is fine. But let me show you a couple of indicators that might work. Is Donchian, or I don't know how to pronounce it because I'm. But this is what some of the uh, professionals use. So I don't know, trend ribbon, Donchian. You can see here just simple red, but it captures this, which is that's where it breaks down. But what I've seen certain trading rules, what they do is they'll use a Donchian form of a Donchian, and if the instrument still continues to move up, trend long term, it'll add more positions using Donchian channels. Maybe see if I can find an indicator for that. Using Donchian channels, and then there's a certain cross with one of the moving averages, and then once that's confirmed, then it dumps everything. So I do have um, a, a strategy I'm wanting to test outside of the one I have for the Ichimoku, and use a combination of the moving average plus the Donchian for trend following. So let me think here. Let me see if this might be a decent one. So yeah, this is similar. It's kind of like a Bollinger, but it will add on the upswing. It will add more entries, and once there's a certain cross of a, let's say, a moving average, and it just dumps all the open positions on it, and it works pretty good apparently. Yeah, the CCI is good as well. Yeah, CCI is not bad. The problem is you just don't know as well. Are you a coder, Hitch, as well? Like, do you code up your own strategies or indicators? Because that's another key. So for me, I like I said, I'm using the scanning right here, right, in Python, and then I just add those to the I add those to the was one layer of filtering, and then I do about 5 stage filtering process. So right today I'm going to scan nearly 3,000, and then out of that I might get three stocks that do fairly well. And majority of the time, I'm not saying it works, but it seems to long term do really well with the HCI as one of them. So it's all experimentation and tweaking. I've got the entries down working now. The problem is the exit, and I think the exit's way harder to automate than the entry. The entry is easy. It's the exit. Oh, he's got to go pee. Thanks for letting me know. It's like a Vivek moment with the Elon Musk stream, if you were on Twitter a few Sundays ago. That was a funny moment. Anyways, so that's important to know. As I said, let me pull up a browser here. Um, I mean, we got people coming in and out, I'm sure. So if you got Trader, I can't remember the name of it. Trader. Oh, see, I'm just okay. Let me say Trader View, Trader Sync. So that's what we're looking for. So I've been playing around with this service here called Trader Sync. I think this is important for people to know. So let me pull up the browser. So I have nothing to do with this company. I'm not affiliated and all that. But what I will say, as I said, I've got the entries down pat. But when it comes to the exits, so if you're a developer, what you can do is, I'm not sure if they do have an API, but the magic comes into play for the exit side is you want to be able to manage your exits. And it's very hard to do based upon your count size. So let's say you have like 10, 20 open positions. I would say it's virtually impossible to watch each and every open position to see how it's doing on the exit potential. So doing this now for quite a while, I will tell you, depending upon your asset you're watching, if you're watching, let's say a stock, everything's based around the performance of the stock market. So if there's like a week, let's say over 5 days, there's 3 days of rallying, and then 2 days of breakdown. So 3 days up, 2 days down, and you have a very volatile market. So it's very hard to watch open positions there in that kind of condition. It's probably the hardest out there. But when you look at um, what we have right now, 7 weeks of rallying, that's easy. But you still have to maintain those open positions. So at the end of the day, that's a very hard thing to retain profit. I've shown you already in this stream when to get out, when you should get out. To make that life easier, if there is a way to manage the open positions and do some kind of analysis to tell you when to get out based upon various market conditions, you should be able to automate that. And the best place to go are these trading journaling websites. So there's really three: TraderView, this one, and Trader V8 or something like that, depending upon the access and what they offer in the API. And if you have the programming skills to be able to watch those open positions to say, get out of this one, get out of that one based upon these calculations. So that's what I'm planning to do next year to sort of like all my positions can be profitable. The problem is if I hang on them too long, they're not going to be as high as they were before. I may miss the peak, or I hang on them too long, and then I'm taking on losses. And that's what's happened to me this year because of there were certain periods of time that the markets were fairly volatile. Or you get the scenario of what happens if we go into some kind of mini crash? What do you do then? What do you trade? Or do you trade at all? I've already shown you two examples that you could use in 2022 when the market's lost, and you could just hit out in US dollar and the USD Japanese yen trade and got a nice return without doing anything. On the other hand, when you look at August 2022, there was the condition of nothing was going up, with the exception of oil stocks, and Exxon was the great example of that. If you knew about it, you'd be okay, but then you would have to get out of that Exxon trade at some point to maximize your profit on the exit side. And as usual, if you hang on too long, then you start to lose money on that trade, which is what you don't want. So you have to bring in some kind of mechanism that you can have to manage those exit potential, I should say, and measure it against the overall condition of the market. And it especially gets hard, as I said, when everything goes sideways or you're in a crashing market. But even if you're in a crashing market, certain things will continue to rally. It's not going to be like, as I said, with the cube trade, and it's going to do very well because it's a REIT based around the performance of you know uh, the market condition. So he's back. Nice post. Are you writing PineScript? Yes, I do PineScript. That's what I was asking you. Do you do PineScript yourself? So my case with the Ichimoku instrument I've shown. Let me see if I have it. But the one that had the Ichimoku cloud, yeah, that's customized. It's a little different from the standard Ichimoku as well. But the one I really want to, and I should have started earlier on, was the that Donchian one. I call it the Bunny G because that would have been an awesome strategy to be running in what we've got 7 weeks of rallying in the markets. And the other thing is when you design these strategies, you want to be able to ensure that they can work universally in any asset class and under any condition. I use a 3 time frame study. Did you build it yourself, or did you just went out and found something that you seem to work on one of the indicators on TradingView? Let me know. Uh, 1 week, 1 month, 1 week, 1 day, etc. Oh, I see. So, are you running layer? Are you layering multiple charts? Let me think here. There's so let's say let's use Bitcoin as an example to try to figure out what you're doing. So if you're watching Bitcoin, or let's say WTI as an example, you have a 5 year chart like here, and you're running. Is this all in one chart? The 1 day, the 1 week, and the 1 day all in one chart, and then you're able to figure out the timing on those different trend lines. And are you also using the classic move like SMAs or moving average crosses because those work as well? The hard part is trying to find the winners of what's about to break out. That's hard to do. Um, so I'm not sure. But Hitch, are you a coder yourself, or you just look for the indicators? Yeah, EMA is one of them. SMA. I mean, the crosses do really good. That's probably one of the most reliable indicators out there. So if you look for this, might be one. I'm just randomly choosing here. You can see it works, right? Here's your long, here's your short, here's your long, here's your short. Nothing you'll be able to perfectly time the exit, um, but generally, moving average crosses, be it SMA, EMA crosses, work really good. And you get rid of the false positives, which can cost you as well in commissions. So you want to avoid those. Here's a good example, right? So you have a long entry, and there's a cross there, but it saved you that big loss right there on that cross. So that can be a saving grace for you. With SMA or EMA crosses, they're pretty good. I find you want to use indicators that give you no lag whatsoever. Um, so if you get lag in certain indicators, which most do, about 90% of them will give you lag, you will run into problems. So non-lagging ones would be moving averages. RSI is a pretty good one as well. What else is a non-lagging? Yeah, there's a bunch. MACD is another one that doesn't lag, uh, and so on. Now, I could recommend something outside of TradingView, but against I go against my the rules that I have to work with in TradingView. So if you want to know, just look, go onto my profile and you can find my email through the other and just ask away, or just message me on TradingView as well. I'm not sure if I can even. I should be able to do that privately. Any other questions or comments? I mean, this is one of the longer streams I've done, but this is really good. And you guys got any other questions? As it's 5 o'clock. So nice post, but volatility is my friend and needs a change to decide. Yeah, thanks for the compliment, and I think somebody else gave me a compliment as well. Thanks for that. See, here's the thing: if you want to make money online, especially where I do think we're going to hit really, I don't want to use the word dangerous times, but unpredictable times. I've read multiple times when you look at a treasury. A very good example is TLP, right? So if you look at the um, overall treasury, it should not be volatile, right? Like it should be boring, but because of the debt situation, there is volatility in treasury, and it's getting sometimes dangerous to a 6%, and that's when things start to break, as it happened in March. And they call it the bubble of all bubbles, the mother of all bubbles. Many things will break, and we shouldn't see volatility in treasury. So what they're predicting for next year is going to be volatility everywhere, and you got to figure out where to go to not find volatility, because the volatility, when you have an open position on whatever you're trading and you have a drawdown that goes against you, and when you do get profit, when you get the whipsaw that comes in, takes you out, it's because of volatility. And from my point of view, you want to avoid wherever you can on whatever you trade, some kind of filtering not to take volatile instruments. If it's crypto, only crypto is doing well because there's trend and the momentum in the crypto market where there's um, good returns in crypto. And there was that so-called crypto winter, which was what, a year and a half long, and you couldn't make money in crypto. But unless there's the trend or the momentum, you can do well. But you want to long-term do better is to always pick low volatile steady eddies, as I shown earlier in in this stream. You'll do better, and you'll have a stronger heart because you won't take on the anxiety that comes with volatility. So I'd rather make money, yes, but not take the outperformers, because usually, as I shown earlier, the whipsaws will be deeper on the losing side if there's negative drawdowns and deeper negative drawdowns, which you don't want. Always set stop loss to preserve your capital. Stocks can go to zero. Yeah, everything can go to zero. Here's the problem with stop loss. I'm not saying they don't work. Depending upon your broker, I'm with Interactive Brokers. Interactive Brokers is honest. If you're with another broker, which I won't really, but let me just say this: they do sell their order flow to hedge funds. So those kind of brokers, if you know what I mean, or other brokers that are questionable, um, you will lose money over the long run. So you want to avoid those brokers. Interactive Brokers is not one of them. And yes, you will take losses. But here's the problem: if you are on a quote unquote sketchy broker, and you do try to use stop losses, those stop losses may not kick in. Why? Because of bad tech, or that the stocks get overwhelmed and they can't kick in with the stop losses where the broker will allow the stop loss to kick in. So you prevent the loss and you still lose money even though you had a stop loss that did kick in. What will that sketchy broker turn around and say? Sorry, bad tech, it's not our problem, and you take losses and nothing you can do. And there's lots of brokers and exchanges that part of that. Forex is notorious for that. And not only that, but they also have the market makers going against you if they have a market making division within the broker or the exchange. And that's notorious in both Forex and crypto. So even though stop losses may not be a guarantee. So that's what I'm trying to say is that you want to find the low volatility, the non-exciting ones. And as I said, these are the ones that I'm looking at. You can see they're not very exciting ones. Who wants to trade real estate? Who wants to trade China or the financials? But these are the ones giving decent returns, and this is all measured by ETF. And they're decent returns, not exciting returns, but they have lower volatile returns. So that's all I'm saying on that. So yeah, do use your stop loss. If you can use a trailing stop loss, even better. But it's never a guarantee depending upon your broker. Very important to know that. Yeah, that's all I can tell you about stop losses because you could trade all you want, you can learn all you want, and then you may start taking losses and you don't know why because you don't know what's going on the other side of the trading wherever you are. If it's an exchange or a broker, they may be cheating you and you may not know about it, right? And only people follow because everyone else and their cousin Johnny's using them or what they see on YouTube or whatever. You have to play it safe. So every trade up or down costs quarter percent. Go fight them, but we'll lose. I'll give you a story if you want to know. I had somebody come to me a few years ago that were trying to fight Oanda. So what happened was this was the same time period where FXCM got booted out of the U.S. So Oanda is still in the U.S., one of the so-called cleaner brokers. I think they're much better now, I think. But he lost a lot of money, like 80 grand or something, because of he had stop losses. He had all of these, whatnot, and he still lost money because his stop losses did not kick in. So what he wanted to do was to take Oanda to court. And he was dealing with one of the lead lawyers, gave me the guy's name, and I knew that this guy was not BSing. And nothing Oanda would do. Nothing Oanda wouldn't care. They just didn't budge on the argument of this guy's account. So what he did was he filed a court case against Oanda at the federal circuit. I think it was in Boston or whatnot. And as soon as that was done, Oanda said, here's your check. We're cutting you, closing your account. Here's your money. And why did they do that? Because they didn't want to have on public record that there's now another lawsuit with Oanda, and they would have been booted out, no different than FXCM. So what I'm saying is be very careful on the brokers and exchanges you choose. Even though you think that the stop loss should protect you, it may not. But as I said, with interactive brokers, I'm not too worried about them because I've been operating for since the 80s. So I feel pretty safe about interactive brokers. And for sure, you should be very careful, especially in the crypto world. I'm with Kraken, and I can't guarantee that they won't monkey around with stop losses, but I feel safer with Kraken versus any of the other US-based exchanges out there. Yeah, so be very, very choosy who you go with. Reputable. And one good measurement is based upon customer service. Because customer service is important. If you get good customer service with a broker or an exchange, chances are they're not going to screw you over, right? And interactive brokers has improved quite a bit. They're trying to make money on the data. That's where they rip you off. That's the good thing about TradingView because the data, hey, when you go up into the higher tiers, the data for what you're paying, there's really no cost when you factor in the data that you pay outside of TradingView versus TradingView itself. Like the cost of TradingView, you can make up in the data cost you would get with like an interactive brokers. Any of you guys got any other questions at all? Thanks, Hitch, man. This is what I kill for. I'm gonna reach out to you privately. I want to. I'm doing something to my website, so you might be interested in that. Um, yeah, so let me know. So it's only a quarter of a percent, so do not overtrade. It quickly adds up over time. Yeah, exactly. And you add risk in your open trades as well. And not only that, you want to do it smartly so um, you're not taking on too many high commission costs like I am with interactive brokers. Because I'm putting on too many trades, trying to scalp and blah blah blah, and you get killed on the commissions fees as well. I mean, it's a state of it's a factor of doing business, but you know, yeah, commission fees, even if you're profitable, can eat into your overall net profit. I think it's just me and you, Hitch. Anything else? We had a good crowd. No problem, Hitch. I might do something tomorrow. If I'm gonna reach out to you, you let me know privately, and I can do a stream at a time that works for you because you're a great, we'll just say sidekick for these streams if you want. If you got anything else you want me to look at or talk about, yeah, this is a very very good one, and this was however long, but this is what I kill for on. And I think TradingView is an awesome venue for this. And having guys like yourself, you could be female for all I know, I don't know, but the person that you are really adds to it. Anything else you want to add or comment before we part? I'm hoping to contact you before Christmas. If not, have a good holiday season and all that. Anything else, guys? Or Hitch? Guy. Okay, cool. All right. Um, anything else? I'll do it going once, twice, three times, and I'm going to shut her down. Going once, going twice, going three times. I guess we're done. Yeah, nice stream. Thanks to you. This was beyond nice to uppity up. This was really good. And you definitely know your stuff. Some of the pics you shown were awesome. All right, man. You have a good night, and maybe we'll see you maybe next few days and after Christmas. And I'll reach out to you privately as well. Thanks again. Have a good day.